Hi traders, Luke Suddards here, global macro strategist at Pepperstone, with another episode of Technical Tuesdays. Again, pre-recorded video. It will be live on TradingView stream, so you can ask any questions in the chat there. So let's start as we usually do off with the US dollar index. Got a 5-minute chart. Let me just switch that to a daily. So you can see here quite clearly that the 21-day exponential moving average is being a very good sort of dynamic level of support. And price is continuing to push higher. We saw Powell out with some hawkish commentary yesterday, which is now getting the market on edge, about 50 basis point hikes, even an inter-meeting hike. So inter-meeting hike just between meetings between now and May. The RSI is making a resurgence back. It's bounced off this level here around the 50 point. Targets wise, I'd look towards the top there at around 99.5 and potentially 100. And then on the downside, I'd look for a breakthrough here at this level, which seemed a bit sticky around the 97.8, 98 level, around the 21-day exponential moving average. And below there, we've got this former range resistance around 97. Let's move on to Euro USD. We can see here that we saw some buyers, prices pushed down, some buyers stepped up and bid price higher. Let's see what that 21-day exponential moving average, if it works as resistance again in this case. It'll be interesting to see. And from there, I would say the next target would be around 111. We saw there's a bit of resistance there, a bit higher at 111.2. There's also some there. On the downside, I'd look for pushes to the round numbers, so around 109, bit of support there, and then below there 108. And obviously we've also got the 50-day simple moving average. One could draw in a little Fibonacci from the swing low and swing high and also utilize that. The RSI is turning lower and by the 50 zone, so that's one to keep an eye on. Let's go to pound dollar, which I have actually drawn a Fibonacci tool on. It's from the swing high to the swing low. So we saw prices between this sort of 23.6 and 38.2 level. We've also got quite a key level of resistance here at 132. And above there, just above there, we've got the 21-day exponential moving average, which is also creating some resistance pressure for GBP. RSI is pushing out of oversold territory. It's trying to move higher. It's still got some room to run in this rally if it does decide to head in that direction. Let's move on to Euro GBP. Euro GBP seems to be rolling over a bit here, got very close to that 200-day simple moving average, which has provided strong resistance in the past. And now we're just below that 50-day and 21-day exponential moving average, with price potentially eyeing a retest of this 0.83 level. The RSI got quite close to that 63, 64 level, which is capped price peaks previously, and it's rolling over. So let's see if it can give the 0.83 floor another test. Dollar yen, well, wow, I need to actually adjust my chart here because you couldn't even see the price candle. It's up shy of 0.7% today, and this is the highest it's been since February 2016. This sort of ascending flat-sided triangle patterns worked out perfectly. We've breached the 120. It's a key psychological level. The RSI is in deep overbought territory. It's gone up in a straight line, so we could see a pullback here. There's substantial divergence between the 21-day with price and the 50. So yeah, it could come back a tad bit in the near term. Same thing with AUD JPY. It's flown like a rocket ship, and it's disconnected from its respective moving averages. Price is in overbought territory. Interestingly enough, this peak here is actually higher than this peak over here. And that was obviously a lower high than that high. So a tiny bit of divergence there, not as strong momentum. As you can see, if I put that little line there, it's lower. So we could see a pullback on that too. Let me go back to US dollar JPY and see. No, there's no divergence there. Moving on to commodities. Gold's hanging on for dear life around this 1920 level. We've got the 50-day simple moving average not too far below there. It's sort of getting quite like capped by this 21-day exponential moving average, capping price gains dynamically. Price is below the 62 level. That little indicator, the percentage above below the moving average, 50-day simple moving average, has come back down to normality a bit here. It was very overextended there. Gold, interesting asset at the moment with all the Fed speak and everything like that. So one to definitely keep an eye on. And then moving on to spot Brent, we've obviously got oil, very interesting asset surge yesterday on that attack on the Saudi Aramco facility by the Houthi rebels, and it's down today. It found a bit of resistance at the 120 level. Um, Lots of volatility in this asset, given it's like center stage in this uh, conflict, and obviously a few other factors driving it. Um, the 21-day exponential moving average should provide a bit of support now around this 110 area if price was to pull back. RSI is a bit in no man's land. Targets on the upside, though, for me, I'd want to see a breach of this 120, and on the downside, around 110 would be my level I'm watching. Let's take a quick look at interest rate pricing because, wow, December 2022 contract, the Fed Fund futures is now pricing in apologies. It's now pricing in 8.6, almost 9 hikes for the rest of this year. We've seen July now almost move up to 5. September's in the 6.5 area. So yeah, market's getting really hawkish. And the December, I haven't got it up now, but the December 2022, the spread between the December 2022 and December 2023 contract is actually negative now. So it's basically saying the market's saying we think they're going to cut and they're going to take rates low and they're going to reverse. I think that's why gold's doing better actually, because it's sort of a policy mistake hedge. That's it for today's episode of Technical Tuesdays. I'll see you all next week. Thanks for listening.